YouTube and the computer volume all the way up. Cool. Grab that link. Oh shit, I didn't even do that. Whatever. Cool. It's up there now. Fuck it. Let me pop the chat out so I can see it. And that should be it. Alright, so see if we can mark some levels out. So yeah, here we are. These are levels that I pretty much don't touch this chart. I made it once, and I actually need to go down really and just like lock everything because I don't move it at all. Oh shit, that's not the lock button. I'm a fool. Don't pay attention. Yeah, I suggest like have one chart layout where you just mark out levels and then you just don't touch them at all. It's just useful to be unbiased, or sometimes you mark out a chart, but then you may delete some shit and you'll come back to it, whatever. Let's see. Damn, I have a lot of lines on this chart. Because I have lines on different time frames too, which is cute. But yeah, so like you can make multiple chart layouts if you're not sure. Just over here, new chart layout. And then you should be able to like name it whatever you want. It's gonna be blank. It's unnamed, whatever. And then you can like save them. So load, and you can see you can have different charts for different things. I don't need this one, but yeah. So definitely do that. So this is basically just my horizontal chart. I literally just marked out. I went in one day. I marked out a whole bunch of some monthly levels. Then I went into the weekly time frame. I marked out weekly levels that I like. And I went to the daily time frame, and I hit the weekly rectangle like zones of support and resistance, but I kept the man volume all the way up. I can still barely see you. Hold on. Alright, this should be better, right? Let me know. Pretty sure it's better. I'll check in a minute. But yeah, so basically I was just saying like have a chart where you really don't touch it and you only mark out horizontal support and resistance levels. I think is really important to have. So we bounced off the support. We really interacted with it a lot. This entire zone, which I don't have marked out like I probably should, has been what people have been calling like yearly support, the yearly lows. And we've essentially tapped this level multiple times. 1, 2, 3, 4. Each low, each time we tap it, we have a lower close. On the weekly time frame, right? Lower close on the weekly. And then also, if you pay attention, each time we close, it takes much longer to leave the range. So here, this was very quick. It was a flash crash. It was like 2 days. Then here, it was almost 2 weeks. And then here, we literally formed a whole swing low, inverse head and shoulders type of pattern. And so now the question is, okay, this is clearly what we've done. I don't like the way that's drawn. So now the question is, okay, now how long are we going to take to leave this range? I think that's something a lot of people just aren't talking about, that each time that we hit this level, it takes longer to consolidate and accumulate, as these have been accumulations. And not only that, the longer it takes to consolidate, the less, of a result that we see. This is a lower high. So Here we topped out about 12K. Here was about 9.9K. Here was about 8.4K. And it's just like, okay, we take longer. There's more and more time spent accumulating, but a lesser result each time. The idea behind this is, of course, like if you don't understand, I haven't called it a descending triangle by name just because people, I don't know, people take chart patterns and just run with it, and that's fine. Like, understand a chart pattern, it helps like classify certain types of behaviors, but what is important is the underlying behavior, and that's why a lot of people can really get fucked trading chart patterns because they only see the chart pattern, but they don't understand the market psychology behind why this pattern has even, you know, come to exist. The reason behind the descending triangle is multiple taps of support, where support is identified as a price point or a price zone where there are more buyers than there are sellers. There is more demand than supply. That is literally the definition of a support level, right? And so the bottom part of the triangle is flat because it illustrates a price point, a level, rectangle, you know, horizontal line, whatever, that people have decided I would like to buy more than people have decided I would like to sell. The top part of the descending triangle illustrates the lower highs. So when you combine those two ideas together, it means that every time we return to a level where people have decided I would like to buy more so than they decided I would like to sell, it shows that every time they do that, they get less of a result out of it. There's less profit each time people buy at this level. And so what that means, and why descending triangles have been historically bearish patterns, is that at some point people are going to be like, okay, I bought here 1, 2, 3, and now 4 times, and every time I make less money doing it, I'm going to sell this range or I'm going to sell this level because it's just not a good place to buy anymore. Or it doesn't have to be explicit selling. It can just be, I'm not going to buy at this level anymore, in which case demand is going down. And so that's kind of what you have to think about. I went on a tangent about descending triangles, but that's fine. We had to get into that anyway. The point I was trying to say is we're going to spend if this pattern persists, we're going to spend a good amount of time going sideways. This one was what, a month? Over a month. So I don't know. This could be a slow bleed down or whatever. But just keeping with the pattern until the pattern proves us otherwise, we're expecting to go sideways for a good amount of time. Other thing I wanted to show were the Bitfinex shorts. I really didn't want to, but everybody keeps fucking talking about it. So here was the last time Bitfinex shorts were really high. Even then, we went sideways for about a week. Or no, we went sideways for about 2 weeks. So we went sideways. And then as we went sideways, shorts crept up until eventually they were nuked. This was the short squeeze. And I'm also going to explain the short squeeze in a second, because I feel like a lot of people are only paying attention to half of the picture. And so here, shorts were high. Short squeeze lasted 2 weeks. Here, shorts aren't even as high as they were over here, right? Shorts over here were the axis is fucked up, so I can't tell, but shorts, let's look at this. Shorts over here, oh, I guess we are going to leave the candle on, got to a high of about 40.7 thousand. Right now, we're only at 34.1 thousand. So I think that's something to consider, right? Like, people are expecting this short squeeze, but we're not even at the levels that we were at the last time it happened. Unless Bitfinex shorts are lying to me, unless this chart's lying to me. So I feel like I saw a couple people say shorts are at all-time highs, which is just simply, that's cap. That's just not true. And so I'm expecting to go sideways longer as shorts creep up. and perhaps even go past this level, right? Like this is FOMO, best believe. And it does warrant a short squeeze. But I do want to keep in mind like the context of the last time we experienced a short squeeze. We were higher up, right? And there were more shorts. And I guess I'll take this time to get into the short squeeze. So, of course, people understand. So let me break this down just in case you're like very new. A short squeeze is when shorts are forced, a large amount of shorts are forced to cover. When price rises to a certain price point, that triggers a lot of stops. And if you're short, that means you sell. So your stop means to buy, right? It's still the same thing, buy low, sell high, but in reverse, where when you're shorting, you want to sell high and buy low, right? And so you sell hoping that price will go lower, and then you set your stop to buy whatever you sold back at a higher price just in case price moves against you and you're wrong. So when price trails up a certain level and triggers your stop, you are buying. You are now a buyer, right? People who have shorted are buyers. They're in the market to buy. That's the only way you can close your position. And that's something very fundamental to understand. So when people say covering your long or covering your short, that just means they're closing their position. More or less. That's all you need to know. It means they're covering or they're closing their position. So people understand a short squeeze as when there are a shit ton of shorts, more that are usual or normal for that market. And so price will trail up to a certain point and it will trigger a whole bunch of stops. The question is, where are the stops for those shorts? And that's actually, we'll look at that in a minute. But yeah, so that's half of it, right? People covering their shorts, their stops, are only part of the buying that causes a short squeeze. There also has to be other buyers in the market, people looking to trade a breakout, right? You could be flat, or maybe you could be long already, and maybe you're underwater, but now you're trying to buy more and add to your position, whatever. Shorts covering are literally half of the short squeeze. It's not enough to keep price going. Like this is the short squeeze right here, this candle. But then this price movement has to be actual people buying, because shorts aren't still covering up here. I mean, unless you were short, I don't know, from right here or something, which we didn't even clear this high. Oh yeah, we did. We went through it barely. But people need to be talking about the accumulation phase here that needs to precede the short squeeze. I feel like a lot of people are looking for a situation like this where they're like, oh my God, shorts are really high. And then like we immediately just run up to stop them out. That's just not how money or the markets work. There has to be an accumulation phase. People have to fill their bags here on these long ass wicks that you see. These wicks are going to stop out people who are just shorting over leveraged or long and over leveraged. People who are buying and are smart are buying down here, getting filled in on these wicks. We're expecting to go sideways for a long time, and then boom, short squeeze. And people who are flat here buy this breakout. Important. That being said, let's look at the accumulation phase. I just called accumulation. Fuck no. Just this consolidation phase. So clearly, down move. Preliminary support. 1 hour shows it better. Preliminary support. These wicks start coming in. I call this the climax just because of the volume that happened right here. Automatic rally. Secondary test, which actually went past the lows of the climax, but did not consist of further downside. Large green candle came in here, showed demand, right? This is what really set the trading range. It let us know, okay, we're probably going to be ranging for a while. Buyers have finally showed up. Sign of weakness. This is a sign of weakness because we have expanding candle spreads with expanding volume, right? Volume's getting larger. And then the recovery was very slow. It was not a spring because the recovery was slow. Springs are very quick and aggressive moves. They go down and then boom, pop up real quick. This went down and it kind of had this little test here to test for more supply. There was no supply, as you can see by these wicks. Got bought up and then trailed up. Cool. Understand? Sign of weakness, not a spring. Not calling this a sign of strength because we did not get up here. Had we gotten up here, I would have been like a sign of strength. It shows us breaking resistances and buyers coming in at higher prices, saying that they want higher prices. We did not see that. We saw price approach resistance, and then we saw a sell-off, right? Very rapid selling occurring, showing that, you know, the market got up here and was like, this is a good place to sell, not a good place to buy. What is notable is this dump comparative to the pump that got us to the top of the trading range. This dump was on pretty shitty volume, just to be honest. So that is good for bulls if you were looking to get long, because I'm pretty sure this was a 50% retracement. I said there would be a long opportunity around 62.50 is what I tweeted. Clearly, and I had that. I tweeted it with the fib. So pretty much looking at this, not saying to go long here. I mean, as like I said, it's a long opportunity should you be so inclined to go long. But I do want to point out that this was a 50% retracement of this move. If this was some sign of strength, some sign of bullishness, and there was a pullback on low volume, which this was, this is a good place to buy. But I also want to keep in context that this is a consolidation range. We have not yet seen a last point of support in LPS. This could very well be it. But since we have not seen it, I can't say buy here, because the whole point of Wyckoff logic is to wait until a break of the trading range. And then once you break it, then whatever pullback there is, whether it's a reach for it or a firm pullback inside previous resistance turn support, and then you buy here, right? This is the optimal trade entry, right? So there's no way I'm going to tell you buy or sell anywhere in the middle of the trading range, because that's silly, right? That's just not. That defeats the point of the trading range. You buy support and sell resistance. You don't buy no man's land when you don't know which way it'll go. So yeah, I wanted to point out the consolidation range, and also understanding that the last time we were in a consolidation range, it was for a good month. So don't be surprised if we're in this range for, damn, you can't even see it because it just doesn't even show you how many days anymore, but for a good amount of time. Last thing I want to show, or two things I want to show, was the pitchfork. We've drawn this pitchfork a million times. Top, bottom, and then the last top before the sell-off. And then we attach the 1.618 fib wing to it. Just to catch some of the extremities. If you don't put that on there, then you get this. And this did contain price for a good amount, but because we were so volatile, we dumped below it. And so we kind of want to catch these candle closes. And it actually, again, we were validated by coming up here because we couldn't close above this wing. So this wing is important, and that's why I added it. With that being said, look how far above we traded. 66.34. And I think, I don't know what this is. This is a combination of like probably Bitfinex, Coinbase, and Binance. But we traded all the way up here, but boom, closed well within the pitchfork. Not well within the pitchfork, but we closed within the pitchfork. So I mean, this is the point of me saying this is the trend. The trend is down. This right here, these lines, This is a 4-hour bearish order block. Where we dumped on the 4 hours for 1, 2, 3, 4 candles straight. Very solid candles. Had a brief relief on this green up 4-hour candle, and then an area of supply. We continued dumping. And so when we come back into here, we expect for this level to be resistance because it was an area of supply before. Now what's notable is 1, really 1, 2, 3, 4, 5, 6-ish. It depends how you want to count them. But we've approached this level multiple times. Resistance has to give out eventually. The same way we're looking at, support at the beginning of the video on the macro time frame and saying like, hey, buyers are going to run out eventually. Same thing here. Sellers are going to run out eventually. What is interesting is every time we do come in here, the selling gets worse. So here's the selling. Let me just mark it. Here's some selling. Boom. 61.26. 59.95. 58.68. So, I mean, that's interesting because it's like, okay, wow. Every time we come into this level, there's more and more people selling. That could be the retail traders shorting support, which is making for this short squeeze, which makes, or potential short squeeze, which makes perfect sense. But I do think that's notable because this is not a descending triangle or an ascending triangle where we have higher lows each time as we approach a level of resistance, showing that sellers are getting tired. We have lower lows. And some people have drawn this as a broadening wedge. I don't really want to put a chart pattern on it, again, because the behavior is more important than the pattern. I'm looking for us to violate this pitchfork, which lets us know bears are running out of steam. And I'd also be looking for a possible higher low somewhere right here, which would make this entire little formation a swing low, higher low, low, higher low. So that's what you should be looking for. That's what I'm looking at. Also looking at the guppy and understanding that this is very much bearish. I don't know how you can be bullish. I mean, you can be bullish, but another thing I tweeted, like, don't worry about trying to buy the bottom and sell the top. Like, there's so much money made. Look at after the guppy flipped. You could definitely try and buy this bottom here, but look at after the guppy flipped. If you just caught this, yo, that's so much money. And then, okay, you can sell this top up here. Great. But look at after the guppy flipped. There were so many opportunities to sell this. And it's just like, if you want to buy bottoms and sell tops, like, salute to you. Like, but I just don't. It's just needlessly risky when you can just look at the trend and just trade with the trend. And that way the market is on your side. You can play with looser stops. There's just so many more benefits. But I'm not trying to tell you how to live your life, and I'm most certainly not trying to tell you what to do with your money. But yeah, so I just wanted to point that out. Also, the daily guppy was interesting because it's actually, so if you look at the times the guppy has served bearish, here 47 days, here 60 days, here we've only been bearish for 7 on the daily. Yet we're making lower lows, closing on lower lows and higher or lower highs too. So I mean, this is also interesting. Trying to figure out how long we're going to stay bearish. And when we might violate the guppy. That'll be interesting if it happens. And I mean, that's pretty much all there is to it. All I want to show. So appreciate y'all, man. Y'all leave a like, share it, drop it in a Discord, a Telegram, tweet it, whatever. Appreciate y'all support, and I will see you all later.